You see, what the stock markets have been craving lately are rate cuts. For almost a year now, there's been a lot of expectations globally for interest rate reductions from the Federal Reserve. However, yesterday the Fed made an announcement. They've decided to keep interest rates unchanged for the fifth consecutive time. So why did the Fed choose to hold rates steady? It seems the recent economic data is showing that inflation is proving to be more stubborn than anticipated. This has weakened the argument for immediate interest rate cuts. In fact, just last month, US inflation rose to 3.2%, surpassing economist expectation. So what did the Fed have to say about the inflation situation in the US? Fed chair mentioned that despite the recent data, the overall trend still points towards inflation gradually decreasing. He described it as a journey with some bumps along the way, but ultimately moving towards the Fed's target of 2%. So what is the bottom line? Firstly, despite the recent increase in inflation, Federal Reserve officials aren't completely changing their outlook. They still believe that inflation will gradually decrease and expect to implement rate cuts later in the year, although perhaps not as aggressively as they initially thought. For now, the Fed is maintaining the forecast for 3 interest rate cuts this year. On the back of this, all 3 major indices on Wall Street closed at new records. Now turning to the Indian market, which is currently experiencing some ups and downs. Now this volatility is mainly due to several factors, including the high valuations of mid and small cap stocks, the upcoming national elections, and some sluggish domestic trends. However, following the Fed's meeting, there was a positive turn in the Indian market. Both the Nifty 50 and Sensex started on a higher note, surging by over 1% each. The Fed's indication of 3 rate cuts this year had a ripple effect globally, and it seems that the Indian stock markets also felt its impact. Looking ahead, if the Fed does indeed implement rate cuts starting in June, it could significantly boost sentiment in the Indian market. Having said that, this is me, Zana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com